time to be with us. We know this is a busy time of year for everybody, so that you would fit us in. We're honored that you would take time to fit us in. We know this is a busy time for you, both personally and professionally, but it's also an anticipatory time, I assume. You're looking at 2026. That's probably why you made time for today. This issue of how do you use pay to align employer-employee financial goals. The issue we're really addressing today is this. It's I'm a CEO, I'm an owner, I'm leading a business. I feel like I have a good strategy. I feel like I have good people. I feel like I communicate pretty well. What is we're trying to do, where we're going, where we're headed, and so forth. But I just don't feel like my people see the future the way I do, see priorities the way I do, and particularly financial priorities. How do we drive revenue? How do we drive profit? What is their role in that? And that's what we're going to try to address today. The issues that we are addressing in this particular broadcast is a culmination of things that have been happening throughout the year in terms of the learning events we put on. Our major event during the year was our September conference, Accelerate 2025. The takeaway from that conference was a thing we call the CEA playbook, where we curated all of the presentation material and links to it, and even comments from those that attended, put it all in this playbook. And for attending today, you're going to have access to this, and I'll tell you how you're going to get it at the end of this meeting. In addition to that, we have a kind of bonus offer, if you will. This guide, this playbook, if you will, what is an effective employee value proposition? This is going to give you a little bit more detail about some of the things you'll hear me talk about today, but it's really the starting point of how you create alignment with your people is having the right kind of value proposition. How you describe to people the kind of experience you're going to have with your company, the kind of partnership you want to have with them in that process. So those that complete our poll at the end of the presentation today will have access to this guide, and you'll want it. Poll's just 4 quick questions at the end, nothing big, so you'll want to participate in that as well. The question, one of the things that we hear a lot from people that attend these events is, I appreciate the learning and I appreciate you keeping it educational and not trying to sell things. However, it would be helpful to know a few things about your company, who VisionLink is, what you do, etc. So the way that we handle that is I take 5 minutes after the end of the regular presentation. For those that want to linger, I will talk about who we are, what we do, how we do it. So if you want that kind of commercial, if you will, that's when that will take place. If you're not going to stay for that, just a little bit about the company that's behind what you're seeing today. VisionLink's been around since 1996. We're a compensation design firm. We help companies envision and then create, model, operate, and sustain the compensation programs that they need to drive growth in their business. We've been doing this for almost 3 decades now. We have over 1,200 clients throughout the United States and even outside the U.S. We're headquartered down in Southern California, South Orange County, near the Spectrum, if you're familiar with that area. And again, if you want to hear more about us, I'll take some time after the meeting to do that. But let's dive in. If you're that person I described earlier, you're leading a business, you're hoping to get your people more aligned with what you're doing. Today we want to focus on, well, what is the role of compensation of that, or what role can it play? Really better stated is, what role must it play if you're going to create that kind of alignment? And there's really 4 keys we're going to dive into to having that happen. The first one is, you have to have an understanding of why your employees care about their compensation. We deal with it in a pretty rudimentary way, in a kind of cost way, and even a cost containing way. But we want to become more strategic about it. And the starting point of that is really understanding, well, what's going on in the minds of your people, particularly your best talent, your high impact people. Then we want to understand why you must understand why the employees care about it. I know that sounds like the same thing, but it's not. You want to understand why they care, and then you want to understand why it matters that you care. The third thing is we want to talk about how do you create a pay offering that achieves the outcomes that both the employees want and also the shareholders want. In other words, how do you drive a business model that's driving the revenue and profits that you need, but that your employees are excited about helping you fulfill because of, frankly, what's in it for them and how it helps them with their financial goals. And the fourth, how do you achieve then this kind of joint commitment to creating a unified financial vision for growing the business? And how does compensation play a role in that? So that's where we're headed today. So let's start off first. Why do your employees care about compensation? And when we think about compensation as employers, we're thinking in terms of salaries and benefits, short-term incentive plans like bonus plans, long-term incentive plans of some type, retirement plans or group medical plan. That's not how employees are thinking about compensation. The way of thinking about it is in two categories. One's a personal category and the second is a business category. On the personal side, they're saying, okay, at this stage of my career, there's a certain lifestyle, if you will, that I think that I should be able to enjoy based on my earnings capacity and based on the value that I bring to the employers that I work for. So I am concerned a little bit about where I can live and what kind of vacations I can take. And if I'm in a family situation, I might be concerned about where my kids are going to be going to school for college and so on and so forth. I also have certain career measurements. I'm looking around and saying, what does my compensation tell me about where I am vis-a-vis my peers? I know what my peers are doing. I know what kind of work they're involved with. I think I bring that much value too. So there's a kind of sizing up there that happens. On the personal side, perhaps the most important one is something we've come to call contribution ambitions. Everybody's working towards something, and it usually has a financial component to it. Everybody has a future they've envisioned for themselves, and they're trying to figure out, how do I contribute to that financially now? How do I plan for that financially now? Now, for some people, that's something altruistic they want to do in the future, and they want to make that kind of contribution. Some people see themselves opening their own business, or they see themselves in the future somehow in a more independent financial situation so they can do some more of the things that they want to do, et cetera. So when they're looking at pay, they're not looking at whether or not their bonus plan motivates them. They're saying, if I look at this whole offering that I have, how does that relate to these personal issues that are important to me? On the business side, they look at it and say, well, what does my compensation tell me about my role in this company? What's expected of me in that role? And what priorities I should have? What are the outcomes I'm responsible for in this role? Compensation should tell people that. And I also look at this and say, does this tell me that my employer sees me as a partner in the business? Do I have elements here of value sharing? If I create value, is there a way I can participate in that? Then overall, is there a sense of continuity and fairness? As I was hired here, I was told about the kind of experience I was going to have and what was going to be expected of me and what resources I would have. So now I'm living in the business, and am I sensing that all the way through from leadership communication to the things that people I'm working with and projects I'm involved with and so forth? Is it all consistent with what I heard? And am I being treated fairly here? If I feel like I'm being asked to build something for the future, but there's nothing in my compensation that tells me how I'll participate in that, that's a lack of continuity for me. It's just a small one, but I think, okay, well, that's just a clue to me that somehow maybe they don't see me as quite the partner that I thought they did. So this is what your top people want to be able to say about their pay offering. There's a philosophy that guides how pay decisions are made, and I can relate to it. I understand it and I relate to it. And it becomes a good filter too, because if people don't relate to the philosophy about how they're paid, then maybe they don't belong there, because you want to pay people based on the kind of value that they bring, not just on occupying a seat and doing a job, so to speak. Number two, there's a mechanism for sharing value with those who help produce it. So I mentioned a minute ago. So if I make an outsized contribution to the company that results in a good financial win for the company, there are mechanisms in place. There are pay programs that bring me into that loop, and I participate in that. I have opportunities for increased earnings if I create increased value. And I'm taught how that can happen. I taught what value creation means in the business. Taught about something we'll talk about in a minute called productivity profit, and that threshold we have to reach before the company is really in a position to share value, or before I should expect them to share value. And finally, I feel a sense of partnership with ownership. I really feel like, not that I have equity, and maybe a component, but it's in the way I'm compensated. I feel like, okay, they want me, they're giving me a reason to think like they do, they being shareholders, owners, the CEO of the company, and so forth. Now, why do you need to care why your employees care about compensation? Well, it's because we're at a really critical stage right now. Your employees control the kind of experience your customers are going to have with your company. They're your best source of attracting new talent into the company, particularly your best people. Your employees really going to determine whether your business is going to thrive or it's going to stall in this kind of new economy that we're in with everything going on technologically, great swings in the economy, great issues locally and globally that can impact what we're doing. So every day, your employees are going to choose whether they're going to be growth partners or growth inhibitors in what they're doing. And you want them to be your growth partners. So what does that mean? Well, it means that you have to treat them as growth partners. It's not just a cute phrase that you use, it's how you actually view your people. And they can sense and feel that you do. It's the belief that your employees are really essential to your future, that you can't get there without them, and they feel that. And you market a future to them, which is we'll talk about towards the end here. There's a desire to align organizational and employee purpose and values, which is why you're here today. You want this to be a win for your people. And you want them to see both on the purpose side and financially how this really benefits them. There's a commitment to employee role and stewardship success. And that term stewardship, I'll talk about more in just a minute, is really an important one. You have an intent to do what I described earlier and have a sense of, have a philosophy about how you think people should be compensated, and that there's ways that people's financial interests will be met because of the way you share value with those that make those kinds of contributions. And so this willingness to engage in a philosophy of, if there's value creation, we're going to share value with those that help create it, sends an immediate signal to your people that they're in the right place. They're in a place where they're being brought to the table, so to speak, and being able to think through things, and as owners do, because they're really being compensated in many ways the same way owners are. So you want to reinforce in all of that what we call a stewardship mindset. And that's the belief that you have that people are hired to perform a role and not just to fill a position. So that means you have to give them direction and almost a mission for their position, a mission for their teams. What the military calls kind of the commander's intent of what they're there to accomplish. And so what resources are they going to have, and what outcomes are they going to be responsible for, instead of here's the job you have, here's instead the role that you're in and the outcomes this role exists to produce. It's a really important shift in the way that you talk to people. How will you know whether or not your people have assumed this kind of mindset, one of stewardship? Well, you'll see it in the way that they think. You'll see them communicating in ways that you would communicating, making decisions the way that you would make decisions. They have a more strategic approach to their role. They're not coming to you for just with questions. They're coming, they have potential solutions to them. they're focused on outcomes and results, and not just, what time of day it is, and or where we are in the week. You find them protective of shareholder interests. They make decisions in a way that they know shareholders will, because they know that they can't erode a customer or a vendor relationship. Even though that might be more profitable right now, it's gonna erode shareholder value long term, because it's eroding trust with the community of people you need to have trust with. So to do that, one of the things that you need to focus on is a concept we call line of sight. This is really where alignment comes from in an organization. And line of sight means that when your employees come to work every day, they're able to see the connection between these 5 elements. What's the vision of the company? What's its business model and plan and its strategy to fulfill that vision? What's my role in that business model and plan? What's expected of me in that role? And if I fulfill those expectations, how will I be rewarded? So just in those 5 elements, you can see right away how you create alignment. You can use pay to create alignment with your financial interests and those of your companies. So here's where the company is going. Here's your role in it. Here's what's expected of you. Here's how you'll be rewarded. And then you go back to one of those first slides I showed, where how employees are now saying, okay, well, how does that relate to what my financial ambitions are and how I'm evaluating the pay offering of this company? So how do you measure line of sight? You could go out this afternoon and measure line of sight in your company. Doesn't matter if you're a very large company or a small company. Just get 5 to 10, depending on the size of your company, 5 to 10 of your people, and have an informal conversation and ask them these questions. What is the company's vision and purpose? Number 2, what is the company's business model and business strategy? Number 3, what are our organization's most pressing priorities right now? 4, what is your role in our business model priorities, and what outcomes are you responsible for? Number 5, how will you be rewarded for fulfilling those outcomes? Now, certainly at the top there, you want to hear the same thing from all the people you speak with, right? The further down you go, the answers are going to be different, but they're going to be given in the context of those first couple of things there, or those first 3 things. And if the people are giving answers that you would give to those questions and you would want them to give, well, then you have line of sight. If the answers are all over the place or they're struggling to answer, then what? Then you have a ways to go. And you want to come out of that exercise going, okay, well, on a scale of 1 to 5, how would I rate myself on line of sight? When our clients do this, just informally, they come in going, okay, I would say I might be a 2, maybe a 3 on this. And I got a ways to go. Well, if you can get them, if they're that low, even up to about a 4, no less of 5, well, that's real progress. That means you're getting higher commitment from your people because they're seeing things in a way that they haven't seen them before. And it's really critical. You also need to know your talent, which is really the starting point of alignment. And here's what I mean by that. You want to do a talent assessment and say, okay, what are the skill categories that I really need right now to drive my business model? Then you look around and say, well, do I have all of those skill categories? I'm not talking about people. I'm talking about the categories of skills and roles that you need. So where are your gaps? Now, what are those gaps inform? Well, they inform then your recruiting and retention strategy, right? You know where you need to go and who you need to get. But before you know that, it's hard to create alignment because you don't really know what you're trying to unite around, because you don't even have all the roles identified. And then when you do start recruiting people, you recruit people to a role, not a position. It doesn't mean you can't state the position, but you have to be able to articulate in terms of a role. So positions characterized by specific duties you need somebody to carry out, right? Here's the job. A role is defined by the outcomes that you need that role to fulfill. What's your stewardship here? So positions are filled, roles are fulfilled is the way that you want to think about it. really critical in creating this kind of alignment. So third, you want a pay offering that achieves both what employees and shareholders want. That's not one or the other. And that's what we usually see. If something is heavily weighted towards employees and benefiting them, well, usually owners, CEOs are not happy about it. This is why statistics show that 90% of CEOs say that they think their annual bonus plan is unsatisfactory. But why do you suppose that is? Because they don't think they're getting performance that merits what they're paying out. So it's lopsided, right? On the other hand, if it was too metric burden, or it was too hard to understand, because the shareholders wanted to be sure it really covered them financially, well, then the employees, they're not affected by it, they're not motivated by it, they're not even trying to achieve anything that's going to drive it for it, because they even get what they're going to get out of it if they do produce the results that the bonus plan is promising them. So it's got to do both. So how do you do that? Well, you have to start with understanding, first of all, what is the role of compensation in your business? What's its job? What should it be doing for you? Well, you're getting a sense for that already by the things we've talked about. But first of all, it's a core and almost central component of your overall employee value proposition, particularly for people that you're hiring in. It's a way that you communicate a whole bunch of things. And it obviously defines the financial nature of the relationship you're going to have with those people. It's the kind of financial partnership you're defining. As Roy already talked about, it should help your people understand better what their role is, what's their priorities in those roles, what the outcomes are they're responsible for, and then what are the opportunities for earnings they have if they're creating the value through performing their roles and the stewardship that they have. And again, that phrase I mentioned earlier, overall, the role of a compensation is to create a more unified financial vision for growing your business. If you don't have that unified financial vision, it probably means that right now your pay offering is incomplete, or it's not compelling, or both. Usually it's not compelling because it's not complete. And we'll talk about what complete looks like in just one more minute here. So the traditional premise in all of this is that if you want to get your people excited about something, then you focus on the incentives that you're paying them. And you drive that focus through carefully designed plan metrics for those incentive plans. So the theory is that if you reward employees for achieving results that are as close as possible to their job duties, and you get the right metrics for that, and you get them focused on those metrics, then everybody's going to be doing all the right things, and you add all that up, and that's going to add up to overall company performance because everybody's individually meeting their metrics. The problem with that is you can never come up with all the right metrics. It's confusing, it's time consuming, and it's the wrong premise to start with when you're building any kind of incentive. What you want to start with is what we call this value sharing premise. And the premise is this: at our company, you participate in the value you help create. The higher the value creation multiple, the higher your earnings multiple. And you start off by having people understand this starts with a company value creation threshold. I'm going to describe you in just a minute one of the ways that you can determine what that threshold is. But there also can be team value creation thresholds and even individual ones. But it's saying, unless we meet these thresholds, we're not in a position to share value, because this is the point we have to reach before we can make sure we are fueling our future. We're protecting profits so we can fuel our future. And now we're in a position to value share with our employees. So is this a distinction without a difference? No. In an incentive compensation environment, the focus is on behavior and reinforcing individuals' really self-interest. In a value sharing environment philosophy, you're rewarding value creation, you're reinforcing a unified focus on profits and growth. It's a very different kind of a focus. So you want to do this. If you want to do this right, you tie everything to something we call productivity profit. Productivity profit is the surplus that can be attributable to the contributions of your people, as opposed to just momentum and goodwill and the capital investment that shareholders have already made. So I'm going to give you a really quick example. I'm going to run through this real quickly because we're running right up to the end here. But just listen to the concept here, and you may have a different way you do have going about this, but understand what we're talking about here. So in our example company here, we're going to say we have 3 shareholders that own this company. And over time, they have made investments in the company, and their share value of the company has grown because of that. They've also taken out loans. They've contributed assets to the company. So they built up what we'll call a capital account. And we're going to say, in this case, it's $20 million. Well, there's a cost to those shareholders for leaving that capital in the company. It's an opportunity cost, if you will, because if that $20 million wasn't in the business, they could take it out and they could invest it. So we have to account for that. We're going to say the cost of that capital, that opportunity cost, is 12%. Where does it come from? Well, it's right now, for today, it's a bit random, but we see anything from 5% to 30%, depending on how high risk that business is and how mature it is and so forth. But it's something that we have to account for to protect shareholder interests. So 12% of 20 million is 2.4 million. We're going to say that's our capital charge, meaning what? We're going to say, before we account for any profits to be used for anything else, we're going to say we're setting aside on the books $2.4 million as a opportunity cost protection for our shareholders. So if we have operating income of $10 million, we subtract the 2.4 million from the 10, we have a productivity profit now of $7.6 million. Now, if we're paying out $25 million in salaries and incentives and benefits and commissions and so forth, then we can divide that number into our productivity profit and say we have a return on total rewards investment of 30.4%. It's a ratio. People look at that and say, oh, well, that sounds pretty good. Is that good? We say, no, it's neither good nor bad. It's just a benchmark you're going to look at over time. What you want is to make sure that the rotary is going up, because if it's not going up, it means your productivity profit isn't going up, which means you're not getting enough performance out of your people, and you're not getting that alignment we've been talking about, which is really critical. But here's the important thing. Productivity profit becomes the source of all of your variable plan payments. So your annual bonus plans, your long-term incentive plan, your spot bonuses, et cetera, should all come out of productivity profit. And if there is no productivity profit, then what? Well, then we're not in a position to pay out incentives, or what we call value sharing payments, because there's not sufficient value that's been created. So when you take this approach, you create alignment through pay, because accountability is built into your pay system. And you explain to people what productivity profit means and why it matters to them. And then you approach all this with a balanced pay strategy that makes sure you have all the components that you need. They all know what their relationship is to one another. You have benefit components, you have salary components. You think through what's the purpose of each one. Should we have all of them in our offering? How much weight should we be given to anyone? And you have this dual focus that Peter Drucker talks about, that it's balance. We're focused on the short term, but we're making sure we're keeping track of the long term as well. And when we do this, we're treating now our compensation as an investment, and like an investment portfolio. And our individual offerings are like our investment assets, or asset classes inside our portfolio. So as economies shift and they go different directions, we don't take everything out and put all new assets into our investment portfolio. We don't do that here either. We just rebalance. We give a little bit more emphasis to the long-term plan than the short-term plan, if this is going to be a difficult year for us, et cetera. And we make sure that we're looking at what is the right balance for us in our portfolio. one of the flaws that was revealed during the COVID economy was this imbalance. Everything was heavily weighted to guarantees, heavily weighted to short term. And so companies that they were laying people off, they didn't know how to deal with it because their cash flow was drying up. This didn't serve either the shareholder or the employee's interest in what they were doing. And our culminating thing here is how do you bring this all together to form this kind of joint commitment to unified financial vision? Well, you do that by marketing a future to their people. And here's what I mean by that. This is the conversation you want to be able to have with your people. Suppose you're sitting down with somebody that's just you're trying to recruit them, trying to hire them. This is what you want to be able to say to them. Here's our vision. This is where the company is going. This is where we're going to be a year from now, 2 years from now, 5 years now. Here's how we plan to get there. Here's our business model. Here's how we generate revenue, and here's how we're going to grow that, et cetera. Here's the role that we picture for you in that model. Here's how we encourage our people to grow and contribute in the company. And here's the resources you're going to have access to help you make that contribution. Now, here's our philosophy about how we pay our people and how they're rewarded for what they're doing. We have this value creation concept and value sharing approach that we take. Now, here's our specific pay programs, the ones that you're going to pay to participate in. And here's how they're going to work for you if we achieve our plan. And that kind of conversation is much easier if you have something like this with something we call employee value statement. This is not a historical looking back. Here's how much your relationship with our company was worth to you last year. It's looking forward. Hey, over the next 5 years, this is not a $160,000 salary position you're being recruited to. This is a $1.7 million opportunity for you if we can work together and get aligned on what we're trying to achieve here, because these are all the kinds of plans you're going to be participating in. So I hope you can see then where that alignment comes from. If you understand why your employees care about compensation, you understand why that should matter to you, because how critical it is you develop this growth partnership with your people. You start creating an offering now that achieves the outcomes that both shareholders need, but their employees are looking for. And then you market a future to them by creating this kind of joint commitment to that future financially, because everybody sees how they're going to benefit. That's how you move the needle on this issue. Now, again, for participating today, we're going to give you access to the CEO playbook. That was the deliverable, the giveaway, if you will, at our conference in September. I'll talk to you in just a minute about how you're going to get that. You also have this bonus offer. In just a minute, we're going to have this poll show up. If you just answer the 4 questions on the poll, it's a series of 4 questions, then we'll make sure that you get this playbook as well. What is an effective employee value proposition? How's this going to happen? Well, you're going to get 2 emails. 30 minutes or so after this after talk broadcast today, you're going to get one that's going to thank you for being here. It's going to give you a link to the playbook. And for those that fill out the polls in just a minute, you'll also get a link to the playbook about the employee value proposition. And then tomorrow, you'll get another email from me that will give you a link to the on-demand recording of this broadcast. Encourage you to share that with your colleagues and so forth, so they can benefit from what you learned, and you can get everybody united around what you're learning today. That'll also give you access to the slides that I've shared as well. So let's go ahead and launch that poll. To the right, you can see it show up. I think it might also fill the screen in just a minute, but Kendra, if you could go ahead and launch that, and we'll just see how we're doing with people participating. The first one is each of these is answering just everything from how valuable you thought today's session was, a couple of things that we want to learn a little bit about your business, and then whether or not you would like to schedule a Q&A with a pay expert at our company. It's not a sales meeting. That's just to find out whether or not you would you have some questions that we can answer for you. And if so, we'd be happy to take a minute and and help with whatever we can. If we can't answer them, we're not the place for you. We'll tell you, we know a lot of places that would be helpful to you and would be happy to send you that direction. It's like we have just about everybody completed here. Give me one more minute. Okay. Thank you for doing that. We're going to transition here in just a minute to that 5 minutes of about VisualLink, who we are, what we do, how we do it. If you are not going to stay for that, I want to thank you for joining us today. There's my email address. Feel free to reach out to me personally if you want to. If you have a question, if I can't answer it, I'll get you the right person or point you to the right resource. We'd love to build a relationship with you and get to know you a little bit better. So feel free to contact me and look for those emails so you can gain access to some of the other resources that'll be available to you. And with that, I'm going to transition now to this 5 minutes about who we are, what we do, and how we do it. So for those of you that are still with us, just to go back with to what I said kind of at the beginning of this meeting today, this is the way you want to think about us. We really transform pay into a growth driver. So first of all, we're a business. We have to pay people. We've had conversations with hundreds of CEOs over the years that we've been doing this, and we understand the kind of conflicts, challenges, frustrations they have in trying to pay their people the right way. And primarily it has to do with nobody thinks they can get away with just not paying their people adequately, but they do want to make sure that they're getting the mileage out of the compensation dollars that they're spending. It goes back to that productivity profit discussion we had earlier. They want to make sure that what they're paying is driving a real return. It's a huge investment. For most companies, compensation is the biggest item on their P&L. And most, at some point, CEOs, owners, shareholders say, what am I getting for that? What am I driving for what I'm paying? So that's the lens we bring to this, is that this has got to be a growth driver. So we help you think about the issues that are going to make them that. From a practical standpoint, what does that mean? Well, companies come to us because they may have some kind of very specific kind of a need. I'm a private company. I want to incentivize my people to help us grow. I'm not sure I want to share stock. I'm not looking to bring other shareholders into the mix here. But what are my alternatives? I've heard about phantom stock. Is that something you can help me with? And the answer to that question is yes. We've probably done more phantom stock plans than anybody in the country. But there's other kinds of long-term incentive plans. And so we help you think that through as well. Let's look at what you're trying to achieve here and whether or not phantom stock is suitable for you. Maybe it's your short-term incentive plan. Either you have one and it's not working, or you don't have one, or you don't have either a short-term or a long-term. That's really where you kind of need to begin. Other people need more of a total rewards operating system, or they need something to look at things more comprehensively. And so we have different ways that we can be engaged to help you look at those things more comprehensively and build things more comprehensively. Some of those are, assessments that we do, but some of those are also where we're hired to bring in what we call our VisualLink compensation solution, which is really a retainer relationship. Think of it as kind of a fractional compensation advisor for a while that you have living with you, getting everything set up properly and organized and things envisioned and communicated and operating correctly and so on and so forth. So the way you want to think about it is, if I have a comprehensive need, we can help you with it. But if I have a very narrow and specific need, we're happy to talk to you about that as well. The way we organize things is really in general, and think about it two ways. Technology is a big driver for us. We've built our own proprietary technology. So if you hire our advisors, they're going to use technology to build your plan. You're going to see starting day one what your plan looks like and how it's being built and where it's going. So VisualLink Advisory is our legacy advisory service. Yeah, and even though it incorporates our software and building out your plans and operating your plans, you're really hiring our advisors to ask the right questions, help you develop the right plans, roll it out to your people, and show you how to operate it, etc. Visually direct is for people that say, well, if you have software that will let me just do what I want to do here with my compensation, that'd be great. So you can just hire our software if you want. This is more of a subscription model. Think about it like a SaaS model. Our job when we first come to us is to figure out what's the right blend between these two, because it's not an either or. Sometimes it's, well, how much of it do you want to do on your own? How much do you want to be able to have us help you with, or looking over your shoulder and doing and so forth. And we just figure out then, based on what you're trying to achieve, what your budget is, what's the best way we can help you. Why do people come to us? Well, 5 reasons. One is our philosophy. Goes back to something you heard me say early on. We really sincerely believe that compensation really should help companies transform their people into growth partners. We think people want to make a healthy contribution to their companies. They want to have a good relationship with their companies. And we think that doing compensation correctly can move in that direction and define this financial partnership that's so valuable. Number 2, our process. We've been doing this for almost 30 years. We have a very refined system. We know how to get you from here to there, from A to Z, if you will. We don't put you on the clock and just keep running up hours. You know, going in, how much it's going to cost, what you're going to get for it, how long it's going to take, and our process has been refined and enhanced by the technology we bring to it, which is number 3. Our technology is revolutionary. It's not just compensation management software. It actually helps you envision what you want to do, model it out, build it out, get all of the details worked out, then communicate it to your people through the software, operate it through the software, renew it through the software, have an employee portal so your people can go in and see what the values of their incentive plans and so forth. So it's a really a total operational system, but also one that helps you build what you want to build, et cetera. Our experience really is unparalleled, particularly for private companies, which is the primary market we work in. So our companies that we work with are trying to grow, and they're trying to accelerate that growth. They want to use pay effectively in doing that. We've been doing this since 1996, and when you come to us, you're not turned over to some junior person. You're working with either one of the principals in the company, or you're working with one of our senior consultants, and then they're bringing in the right team to help build out what you need to build. And then results is perhaps the most important thing. We want to understand going in, well, what are the outcomes you're looking for here? And then we're going to help you measure whether or not you're generating those outcomes. And if not, then what do we need to tweak? What needs to be different? Is this a compensation issue that needs to be bettered? Or is there something else operationally going on here in your company that needs to be fixed? And we help you, and we help assess things. Over 1,200 companies have come to VisionLink. You see on here some logos you recognize, but you also see some that are, just some great salt to the earth companies that are out there doing great things that we work with day in and day out as well. So that's it. That's about us. If you haven't had a chance to complete that poll yet, find those little 3 bars on the right, next to right above the chat thread there. Fill that out. Again, appreciate you being with us today. We know it's a busy time of year. Here again is my contact information. Thanks again for joining us today. Appreciate you being here. Hope you're winding up the year successfully, and we wish you much success in 2026. Thanks, everybody, and have a great holiday season.